Mihir Vora joins me now. He's Director and Chief Investment Officer at Max Life Insurance. Mihir, thanks very much. Good morning. Good to have you here. Let's just look at the market, your view, in the near term, next 1 month or so. I understand there's the budget there. But what's the underlying view really? Because one way or the other, the budget will not be able to change the course meaningfully.
Good morning, Prashant. Always a pleasure. You're right in the sense till we see signs of stability in terms of FII flows, I think the markets will remain volatile. We have seen domestic institutions continue to be buyers in a significant way, but the FII outflows have been quite relentless over the last 3 to 4 months. So we need those to significantly slow down or turn positive before we can see the markets finding its foot again on a technical basis. However, my suspicion is that not only India but emerging markets in a wider sense, as well as the global markets, have seen a lot of turbulence, and the bottoms that we saw in the last week probably were intermediate panic bottoms, and we have seen some of the most battered down asset classes like commodities, etc., recover quite sharply from the bottoms over the last 7 to 10 days. For example, commodities like aluminium, copper, zinc, oil have recovered 10 to 15% from their bottoms and are showing some signs of having bottomed out. So probably an intermediate panic bottom in India as well as in the global markets could have been made, and we should see some consolidation in the next few weeks.
When you say intermediate, you mean sometime in the future we'll make another low, lower than the previous low?
So that will be the function of how incremental news flow on the global economy continues. I would say that the Indian story is still quite robust, but the sharp slowdown in profits and earnings growth that we have seen over the last few quarters has to a large extent been driven by commodity-linked sectors. So to that extent, we have seen aggregate market earnings for India come down, and probably they might come down further if commodities prices continue to stay weak. However, the consumption story remains weak. So I mean, it's a conundrum wherein the Indian economy tends to benefit on a net basis because of low commodity prices. However, when there is so much gloom and doom apparently out there, FII flows cannot be robust. So to that extent, we will see a few weeks of turbulence. And when I said intermediate bottom, it could be a year bottom also. It was just kind of the way things are.
But you're not completely confident that the worst may be over, right? I mean, assuming things the way they are,
it's difficult to predict the FII flows. We would have probably thought that the outflows that we saw till the month of December would kind of slow down in the beginning of the year. However, the crash in commodities did continue for longer than the end of the year. So to that extent, we are probably not out of the woods as far as volatility is concerned, and when things are volatile, it becomes a little difficult to predict, in the short term.
Are you saying that a majority of the FI selling has nothing to do with India-specific issues?
Yes, I would definitely say so, because the fact that we have seen consistent outflows from GEM funds, global emerging market funds, after underperformance by GEM markets for almost 3 years, meant that India could not have been isolated, and we are seeing Indian sell-off as a part of a larger global emerging market sell-off. And as I mentioned, the India story actually has turned much better. We have a lot more leeway in terms of our fiscal and trade balance compared to a year back, because of significantly lower oil, gold, coal, and other prices of commodities for which we are net importers. And of course, the government is also using that bonanza to fix the fiscal deficit to the extent possible. So net, the India story has actually turned better, and we have a lot more leeway as a country to juggle our finances and make the balance sheet of the country more robust on a long-term basis. But as you know, when there is a rising tide lifts all boats, and the opposite of it is true. So I think over the last few months, the sustained selling that we have seen by foreigners is part of an overall global trend. My suspicion is that a lot of the outflows are also caused by sovereign funds especially the sovereign funds of the oil-rich countries, which are facing a lot of fiscal stress because of low oil prices and correspondingly low revenues for their particular countries. So that trend will probably may continue for a while.
Okay, fair enough. Let's focus on the budget, Mihir. What's your view? Is it going to be different than the last two budgets? Is it going to be expansionary in nature, or is it going to again focus on contracting the fisc?
My guess is that it will be an incremental budget with a lot more focus on the rural economy. I think the maximum stress as we speak in the Indian economy is in the rural sector because of a really bad monsoon last year, and we are seeing signs of fatigue in the rural economy. So my guess is there would be a lot of focus both in terms of words as well as in terms of outlays for the rural sector, and probably that's not a bad thing. So we may see increase in the outlays to employment guarantee schemes, outlays to irrigation schemes, rural roads, rural housing, etc., and probably widening of and deepening of the rural crop insurance schemes. So probably a lot of thrust on rural. Incentives probably to encourage more exports and make in India as a theme. That is something that we would expect the budget to talk about. And we would also expect the budget to move a little bit closer to the GST regime, which means probably we'll see a hike in the service tax rates going forward, getting it closer to the 18% that probably is the revenue neutral rate. So maybe a hike in the service tax levels to probably 16% or so. And the other thing that I wish that is addressed more clearly in the budget is the outlay for recap of the public sector banks. The NPA problem is here, it's real, and we can't wish it away. The global commodity crash has only made things worse in the last 6 to 10 months. So we need more outlay probably, or a more clearer roadmap from the government and the RBI working in tandem to show us the path as to what the status of the capitalization for PSU banks is likely to be. So these are some of the things that probably are likely to happen or are part of the market's wish list.
Yeah, no wish list aside, but what do you say? What do you think? I mean, so they said that 17 fiscal deficit target should be 3.5% of GDP. Do you think all of this, what you're saying, is possible with sticking to that target? My
guess is that 16 targets are quite likely to be met because we had this big bonanza in oil, and frankly,
budget is for financial year 17.
To plan FIs, absolutely. So what I'm saying is for 17, probably they might want to miss it by a 5 or 10 or 20 basis points, if at all required, to put in more leeway for capital expenditure by the government, because the private sector cycle is still
10-20 basis points, Mihir, what difference will it make, you think? Last year, that is financial year 16.
It makes a big difference.
Government's,
it makes a big difference. It makes a big difference.
I'll tell you, government's capex spending in financial year 16 went up 60%. Government's capex spending in this year to date, right? April to this year, this financial year 16 went up 61%. What big difference has it made? Has it driven a big change? The point I'm making is,
so if you see,
its government's overall share is very, very small in the overall scheme of things. So even if it increases by 60%, the overall number remains small. That's the point that I'm making. And so unless you actually expand it substantially, not 10-20 basis points, right, but substantially, go to, say, instead of 3.5, go to 3.6, 7, 8, 9, or even 4%, the numbers in the overall scheme remains pretty small. That's the point.
Absolutely, but given the fact that the government, as you did mention, is not the key determinant of capex, the point also remains a fact that when you roll out these schemes, especially in the rural sector, it has a multiplier impact. So it's not just the 3.5 to 3.7 adding a couple of basis points to the a couple of 0.2% to the GDP. Is the multiplier impact that also matters. And you also need to understand that we are talking about probably loosening the deficit target by 3.5 to 3.7% in a situation where already you are saving almost 150,000 crores on the oil situation because of higher excise duties on oil, which have been continuously hiked. So my guess is that you might actually see a lot more allocation to the government linked schemes, especially for construction, etc. This year, and this can have a multiplier effect. I mean, we can ask for the moon, but the point is that we only have a limited amount of money to play with, and which means that you need to be smart about what you do and go into areas where there is
exactly
a lot of
the point,
multiplier
Mihir, right?
impact,
The government,
in the rural economy.
the government only passed about one-fourth of
the point is that.
Yeah, sorry, go on. Just complete that point.
Sorry, please continue. Yeah. Now, what I'm saying is that these things have a multiplier impact, and even this year, if you see the construction sector, especially the mid-sized construction companies which have got orders in these segments, have started doing well. So I think it's not right for us to expect a V-shaped recovery. It is going to be a slow recovery cycle, given the local situation as well as the global situation. But probably. Apart from the fact that you need to spend more as far as the government is concerned, both in the infrastructure sectors and in the Make in India theme, we also need to make sure that the government continues the process of making things easier and enabling the local business, especially the private sector, to facilitate capex. So I think as far as the private sector is concerned, easing of the liquidity conditions, making the rules of the business or rules of doing business or ease of doing business, I think the initiatives that have happened in the last few years should be continued, and that's what's ultimately going to create a sustainable recovery. Government spending alone cannot be a driver, but yeah.
No, absolutely. Let's just do a quick rapid fire. Let's just go through a few sectors, and I want to get your thoughts. PSU banks, right? A big expectation of a bank recap. The allotted amount was 25,000 crores for 16 and 17 each. What number you think will make markets happy for 17 for PSU bank recap?
See, the size of the NPA problem has grown so much in the last 1 year that I don't think the market is going to be happy with any number. But the point is that the outlay has to be much higher. I mean, the original thought process in the government's mind last year was 70,000 crores over 3 to 4 years. But that's nowhere close to the size of the problem as we speak now. So
that's what I'm asking. What should the number be?
Going to look
a lakh and 50, 2 lakh?
See, the size of the problem is probably 3 to 4 lakh crores. And the sooner we fix it, the better. Now, the problem is that we are still debating whether, there's a moral hazard, there's a transfer of money from the shareholders, from the taxpayers to the promoters, etc. So we are still stuck in that debate, and the sooner we kind of, address the problem, the better.
Yeah, okay. You think we'll see, I'm moving sectors, tobacco. Will we see excise hike on tobacco once again in this budget? You think so?
I think so. I don't think there'll be a significant excise hike in tobacco, because we are reaching a point where the incremental gains from hiking taxes are not being are being taken away by reducing volumes and movement to the lower ended brands as well as to the BD sector. So there might be some hike, but probably not too much.
All right, housing. One area where there was a lot of talk last year, the year before last as well, but it's kind of now faded quite a bit. You expect some SOPs, tax benefits, etc. for that sector?
I would hope so, because this is one sector which can generate a lot of economic activity, especially in the rural and the semi-rural segments. That would be a wish list from the market's point of view, that significant SOPs for the housing sector. If you look at the total capex in the country and the total investments in the country, rural housing is one of the biggest components, and tier 2, tier 3 cities are again the significant components. So we would expect increased SOPs for the housing sector.
Automobiles, there is talk of a pollution tax. There are reports suggesting the government may actually introduce a scrappage policy. Commercial vehicles having run over a certain number of years, 10, 15 years, have to be junked. You think likely?
That's probably likely to happen, but it may not be a part of the budget, because the scrappage policy is not really a fiscal thing. So it may happen outside the budget at some point in time.
Anything for metals? Much higher import
So
duties,
in metals,
etc.
we already I don't know how much leeway is there as far as import duty is concerned, given the WTO conditions that we are bound with. But we have seen MIP being announced, obviously in the steel segment. So some tariff and non-tariff swaps would probably be upcoming for the metal sector.
Mihir, thank you very much for your time. Great speaking with you. Appreciate you joining in, and I hope to talk to you again post the budget. Thank you indeed.